We've been talking about how small caps not quite performing well, etc. One look at the numbers thus far, like the median sales growth for the Nifty 50 is 10.48%. EPS growth is 7.89%. This is Nifty 50. Nifty small cap, the median sales growth is 14.67% and the median EPS growth is actually 15.39%. So the small caps have actually done much better on the earnings front this time around, thus far, than the large caps have. But ordinarily, if all that has happened over the weekend on the geopolitical front wouldn't have happened, I would have thought that you probably expect more range-bound consolidating markets going forward, because that was par for the course. Now we start off with a bit of a gap up. After that, do we still see consolidation? Because I think these days markets tend to discount a very large event almost immediately, and you'll probably see that happening at 9:15 or 9:16. The question is what happens post that, and would we actually see some bit of selling at higher levels? That's to be thought of. I think what's shown strength in terms of quadrants, and if you try and split sectors into quadrants and try and look at the relative rotation graph, defense, aerospace, and select auto stocks have actually shown some serious strength in the last 5-6 days. Does a bit of a pullback come in defense names? Maybe, maybe not. But that's a pocket to definitely keep in mind on the strength side. Independent of what's happening on the geopolitical front, the one pocket to watch out for is companies that are benefiting from state government capex. The capex numbers are still high, but the receivables are becoming a problem. In fact, a clutch of fund managers in Singapore as well spoke about this, and it just looks at, there is a company called Aditya Vision, not into capex per se, but the results came out over the weekend, and I think there's a lot of talk around how receivables for a lot of mid-sized companies which are depending on state government funding is actually becoming bloated, and that might have a big impact on receivables and margins going ahead over the next couple of quarters.
They're becoming bloated as in the state governments are not paying them on time?
Yes. We anyways know that the state government budgets are actually not quite ship-shaped, save for 2 or 3. There is a problem there. So central government, all okay. But if companies are depending on state government capex, then yes, the orders might come, yes, the executions might happen, but receivables are becoming a challenge. So you want to be mindful of stiff valuations in some of those pockets. And people said companies across pumps, across smart meters, across T&D, just be a bit careful.
I think it would also